As finance becomes more embedded, trust becomes the defining currency. Embedding finance is changing how people interact with money, seamlessly, invisibly, and constantly. But trust remains that all-important decisive factor. Our next session, Rewriting the Rules, Embedded Finance and Building Trust in Digital Wealth Creation, will explore how credibility is built in the digital wealth ecosystems that we have. So to join me on stage, we have Walid Hassouna, CEO of Valu, Talal, Tabbaa, CEO and co-founder, CoinMENA, Laurent, of Senior Executive Officer and General Manager for the UAE at Rain Trading Limited, and they will be moderated by Kartik, Iyer, Investment Advisory, the financial wingman. Thank you, everybody. Please welcome them onto the stage.
Let's do this. So embedded finance is quietly making its way into our day-to-day lives without people even realizing that there are institutions behind it. Today, we have three experts from our field within credit, crypto, and digital asset infrastructure, which is pretty much the entire stack of embedded finance. So looking forward to a fun conversation. I'll start with you. So Walid, BNPL, let's go right into it. BNPL, buy now, pay later. It's pretty much become a tool for financial inclusion for most people. How do we sort of look through that into trust, transparency, and actually ensuring that people don't go overboard and are not overstretching themselves?
So I think in Egypt we have a very different experience on buy now, pay later. When we started in 2017, actually this was the first buy now, pay later in the region. So we started like before Tabbaa, Tamara, Spali, and all the other players. But we were lucky enough because we had a very high inflation rate anyway. So we couldn't offer like a buy now, pay later that is zero interest all the time. So we had to offer something that is different. So it moved to affordability more than buy now, pay later. So we started underwriting customers the same way you underwrite a customer for a credit card or you underwrite a customer for a loan. And accordingly, then this moved us into a regulatory framework. So there was no regulatory framework in 2017. Regulatory framework came in 2020. And because it's very difficult to raise money to use for on-lending, which is a very important thing when it comes to buy now, pay later. Most of the money you raise is actually used for on-lending. But the thing is, in our case, it was very difficult because we were doing like a 12-month, 18-month, and 24-month. So it's very difficult for us to raise money, so we had to raise money from the banks. So we had to go to the banks, and the banks want us to be regulated. So we became regulated, we became more transparent. We had to actually underwrite customers using credit bureau data or other data, and also we had to have our default rates very low. So it was like a major change in where I come from. It was a major change. It was a very big pivot from what we know as buy now, pay later. Now we have to respect debt burden ratio, which is very important. So we become like a bank, like a financial institution. We have also to have very low non-performing customers because the banks will not lend us and will not be able to issue bonds and securitization unless we have a healthy portfolio. And third thing, we are heavily regulated by the Financial Regulatory Authority. So all governance and transparency is there. So in the past 9 years, things have changed to make it really trust is very important from the customers because they know they can go and complain to a certain regulator. Banks are part of making sure that we're not providing more debt to our customers because there is a 50% of debt burden ratio. Other than that, they will not be able to lend us. So it was like a journey, and now we are in a little bit in a more maturity. And in Egypt, it's clearer because underwriting is based on a very similar way how to underwrite customers. Our approval rates are between 40 and 50%. Other markets, the approval rates are like 90 and 95%. So definitely, it's a very different animal where I come from.
I'd love to come back to that, to the region that we are in right now. But talking more about trust, Talal, we are living in a world where we can't open the newspapers without reading the words Bitcoin and digital currencies as well as stable coins. I think there's been a huge practical use case for stable coins in the world today. The adoption of Bitcoin, not talking about the last 10 days of what's going on, but the adoption levels have been extremely high, and from an institutional point of view as well. How do you see trust and just adoption? How do you sort of combine these two to take things forward in the space?
Nice. You mentioned we open newspapers and we see that. I think my dad's maybe the only one that still is opening newspapers
talking about him.
Until today. So I guess you have, if you wanted to draw an intersection between the people that are investing in Bitcoin and opening newspapers, you won't find too much. I guess, but maybe that's slightly changed after BlackRock launched their ETF, right? So the crypto industry operated as a fringe industry where you have the financial sector and crypto was kind of on the side. I would say in the past 2 years, it's very much become a core part of financial services. You have BlackRock launching their ETF. It is actually considered the most successful launch of any financial product in history. In the first year or 2 years, they've reached over 70 billions of assets under custody, and it allowed institutional investors such as Mubadala, actually. Mubadala is, I think, the 6th or 7th largest holder of IBIT shares on the US stock market. And that shows you that Bitcoin has changed the type of investors that are coming into it. But I think beyond Bitcoin, you have stable coins that have proven to be an insanely useful use case. If you are sitting in Abu Dhabi on a Saturday morning and you want to send money to New York, it will arrive Monday, 4 p.m. Abu Dhabi time. That is not acceptable in 2026 with the technology that we have. But that's how Swift operates, because they have weekends, they have Eid, they have Christmas. And I guess maybe today we don't see it as important, but if anyone has been using AI, guess what? They're not going to want to use a banking system that has off on Eid and Christmas, because your AI algorithm needs to run all the time. And if you actually ask your AI LLM or whatever bot or agent you're running, what type of money you want to use, ideally it wants to use money that is decentralized and most importantly programmable. So I guess there's things that are exciting in crypto today, but what's really exciting is the possibilities that are going to come down the line.
Yeah, we'll talk more about how this can be actually brought down to the root level. But moving on, Laurent, we're in a very crowded space in terms of the amount of digital infrastructure and the number of platforms that we have on a daily basis. If I look at my phone, I can't look at it for 10 minutes without a platform popping up. What are the trust signals that we're really looking at to build more consumer confidence from a retail and institutional point of view?
Well, obviously, the first one will be regulation. You have to look at any platform and first look if they are regulated. This is definitely the road that Rain has chosen. Like our first entity was regulated under the Central Bank of Bahrain in 2019. We were pretty much one of the first one to be regulated in Bahrain. And then from there, we moved into UAE and into ADGM, FSRA regulatory framework. Sorry, things like
yeah, a little closer.
Cutting a bit.
Yeah.
Yeah. Okay. So yeah, I would say, and Talal is in the same boat than us. He followed the same guideline and expansion plan, where regulation first is what will give our customer the maximum level of security. Second is probably around infrastructure, or having a strong, solid base is definitely a plus now. We saw with the incident or drama of FTX in 2022 that the lack of separation, the lack of segregation in infrastructure, in custody principally, was a massive problem. And this is something that every regulator and every platform such as ourselves have trying to mitigate going forward. So that's my two key point there.
Lovely. I'd love to come back to regulation from a point of view of how does the common man actually, end up trusting a platform. Regulation is obviously has to be. We assume that everything that shows up should be regulated. Otherwise, how is it showing up from a common man's point of view?
No, it's always a balance. Obviously, everybody knows that too much regulation probably cut off any type of innovation. But we need to have And this is pretty much what we have in UAE, where like we have a very strong regulatory framework, whether it's under ADGM, FSRA in Abu Dhabi, but also in Dubai with VARA, at federal level with the central bank that also deliver some type of crypto asset of stablecoin licensing. And all of this aspect bring clarity to the market, to the institutional market especially, but also like to the retail. The problem is, probably education, where like customer, especially the retail part of our customer base, needs to be more educated about and seeing that there is still so many actors in the market that are not regulated. And so they definitely, it comes from enforcement from the regulator, but also from education from a retail standpoint to know that you shouldn't trust a platform that is not regulated.
Right. We had this conversation backstage, and we decided we perhaps might not talk about it on stage, but let's do it. Today, access to consumer finance has become super seamless, right? We're talking about embedded, seamless, they all go hand in hand. But I hear a horror story a week as far as BNPL is concerned. Where do you think the challenge is? Why do you think people are more and more, especially in the West? And I think a lot of that is prevalent in UAE as well. Where do you think the common man is getting stuck as far as access to easy finance?
I think there are a lot of reasons behind that. So first thing is, we have witnessed an era in the last 10 years of growth. Everyone wants to grow. So actually, when it comes to a financial product, it's not only about growth, but it's also about efficiency. So there is no way you're going to grow and you will not be able to collect your money, because the easiest way to sell, the easiest product to sell is to sell money. And buy now, pay later, or consumer finance is actually you're selling money. So it's very easy to convince people to buy money from you. They don't even have to trust you with it because they are not depositing money with you. They're just borrowing money. So the first thing is, I think the major reason was everyone wanted to grow into a massive number of customers and a massive number of transactions. So this is the first thing. The second thing, I believe that people were not underwriting those customers for credit, at least for a good 3-4 years. So until 2022, we've seen Klarna at a $64 billion valuation. Now Klarna, when it's listed, is around $16 billion after going down to $3 billion. And it was at $64 billion, making no profits with very high default rates. Now they understand that this is very important. They want to underwrite customers. They want to make sure they are providing the right customer with the product. So basically, approval rates of 99.9% were something insane. Everyone was trying to use them. Everyone was trying to actually get this debt and never repay it back, because they think if everyone is getting this money, so it's more like, why would we need to pay it back? But there are major changes that happened afterwards. So this was like the introduction of buy now, pay later, growth of buy now, pay later. Now, every single country is trying to do a regulatory change to its platform or to its regulatory platform, and everyone is trying to look at a buy now, pay later from a different perspective. I spoke about Egypt in my first part, so let's speak about the other countries. So now Saudi would require that you check on the credit bureau and look at SIMA, for example, to know if the customer has any exposure. I think they limited buy now, pay later for 2 companies. So if you cannot have a third company, you can only have 2 providers. So this is one important thing. The regulatory platform also has changed in the UAE. In Egypt, we have a more holistic platform because we don't have per se the buy now, pay later, but we have actually consumer finance. So people look at it as if it's a loan or a credit card, so we look like a bank. Even in the US, there are massive changes about that because they want to include buy now, pay later as part of your credit reporting. So it is like any other product. It comes in, it makes a buzz, it grows very fast. Then we start having some issues. We pivot from those issues, and then the regulator comes in and he tries to stabilize it. But again, I don't think the problem with the buy now, pay later is not creating horror stories. It's the abuse or the wrong use of the product is creating this. Because there is no difference between a buy now, pay later product and a credit card, except how we're getting underwritten. So basically, why you don't default on your credit card, but you're happily defaulting on a buy now, pay later? This is something that we also need to work with our customers.
Awesome. Talal, UAE has become the hub or like a global hub, especially in the region for crypto and for digital assets. What kind of regulatory clarity are you looking at that is going to help in mass adoption? Or what are the trigger points that you are looking at from a regulatory standpoint?
To be honest, the UAE, I would argue, has been the most aggressive and progressive globally out of any country in the world, because you have ADGM, FSRA were the first to regulate crypto in the UAE. And then you have VARA, which is a new regulator that was specifically created for virtual assets. Yani, you know how humans usually follow the path of least resistance. They do the easiest thing possible. You have a central bank, let's put crypto under it. You have securities exchange, you put crypto under it. But Dubai and the United Arab Emirates look at it from a new perspective. You have a new asset class. It doesn't make sense to regulate it with the same regulations that you used to regulate the traditional ones. And I think an example of that is when aircrafts came about. You're not going to regulate aircrafts the same way you regulate cars, even though both of them are transportation vehicles or transportation instruments. So today there is over 40 companies that are regulated by VARA. 2 of those companies have been fully sold with their VARA license. So Deribit was acquired by Coinbase for $3.5 billion, and we successfully, alhamdulillah, sold our company to Paribu. So not only do you have VARA that was created in the last 5 years, but you have had companies that got regulated by VARA and were able to sell it to international companies after, which is a testament to the efficiency and that these regulations are actually working. But to add to that, the central bank has also launched payment token regulations, which allow local dirham stablecoins, but also allow dollar stablecoins to be issued and transacted with. So I guess regulators are inherently risk averse. They don't want to regulate something and not have it blow up in their face, but there is only one way to grow and learn, and that is by trying. So I really commend the UAE regulators for putting frameworks that have allowed companies such as CoinMENA to flourish under. But then again, with any sort of initiative, you have upsides and downsides, right? And there were other cities and countries that had the lead in the past. You know, in 2016, 2017, Zug, Switzerland, was considered the crypto capital of the world. So. But I'm very confident that inshallah the UAE and Dubai will continue to push and to continue to grow. And then final thing, regulations alone is not enough. And maybe people will not tell you that as directly. You need business and you need money, because regulations' goal is compliance and investor protection. But that has to come hand in hand with sustainable growing business. And I think the UAE has been able to make that balance in a very nice way. And you have growth for locals and internationals. Yani, you have companies such as CoinMENA, Rain. These are homegrown companies, but you also have Binance it's the largest single crypto exchange in the world, and maybe the fastest growing financial institution in history, has now a home in Abu Dhabi. So I think it's a balance that's difficult to strike, where do you support the locals, or do you allow internationals to flourish? Do you regulate heavily, or do you allow companies to innovate? And I think the UAE has done an excellent job in that balance.
Lovely. While we're running out of time, we've spoken about risk regulation. I want to quickly end with, how do you think with the permeance of embedded finance, how is this going to impact consumer behavior from a transparency and ease point of view? How do you think consumers are going to sort of move into this trust or start trusting these platforms as finance gets embedded into our daily lives?
It's a tough act to get the exact right balance there. Again, to me, it has to come from education. I think that's the strong basis where you can blend the two things. If your customer are very secure, let's say you onboard with us tomorrow, and then I ask you 55 questions to onboard, and then every time you want to do a transaction, and there are 5 or 6 screens pop up, it might be the best security available at this time, but definitely not the best customer experience. If I educate you on not going to the wrong platform, or sending money to supposedly incredible investment opportunity, then suddenly I don't need those screens anymore. And suddenly your experience with the platform is also better. So I think it's kind of a mix. Yes, we need to build as much security internally, but it has to be seamless to you. It has to be seen as less of a hurdle to your journey into the platform as possible. And that's where the balance is, and that's kind of a difficult act to do properly.
Sure. I think in a world where embedded finance is, finding its way into every area of wealth, I think it'll be trust. Whoever builds most trust with their consumers is the one that's going to lead the way. Gentlemen, thank you so much.
Thank you.
It was a pleasure.
Thank you.